The warning from billionaire investor Ron Barron should serve as a wake-up call for all Tesla investors. Find out the important information that Ron Barron has shared on Tesla's uncertain future. It serves as a wake-up message for the whole banking industry. It took me 4 years after we first met in 2010 to start investing in 2014. It was between 2014 and 2016 that we purchased the stock. About 20 times our investment was made there. We are among the biggest investors in SpaceX and have been doing so since 2017. The company does not trade openly. How would you rate it? Currently, we have around $1.7 billion invested. We spent $700 million on it. I paid $400 million of that. In terms of Tesla, the truth is that it holds half of the US market. They are undoubtedly leading the world in EV sales, surpassing all other competitors combined. Regardless of fuel type, the Tesla Model Y is the most popular car worldwide. Ron Barron, a prominent Tesla supporter, has issued a dire warning regarding the uncertain future of Tesla. Some investors are unsure of what exactly lies ahead in the realm of electric automobiles and Tesla because there is a lot going on in this space. Barron, meanwhile, remains bullish about Tesla because of the company's unwavering focus on cutting costs and its quick increase in deliveries. Key points include its rapidly expanding battery business and the technology and software it plans to license to rivals. The financial analyst goes so far as to say that Tesla may eventually increase annual production from less than 2 million vehicles to as much as 20 million. Additionally, according to Ron Barron, Tesla's battery business might triple in size from where it is today. But how likely is it that this will occur? Let's investigate. The price reductions made by Tesla have angered certain investors. Though some investors, like Gary Black, are worried about losing out on $1 billion in revenue, they are still attempting to seize market share. Nonetheless, this emphasizes their strong position and 15 years of experience, which gives them a considerable advantage over startups and the big three automakers, who are coping with labor disputes and rising expenses. The stock has increased 117% year over year in spite of worries regarding gross margins. The CEO of Barron Capital and a billionaire investor is Ron Barron. He is among the most seasoned and reliable bulls in Tesla. Despite Tesla's dramatic price reductions this year and significant narrowing of its profit margins, the well-known investor remained confident. He anticipates that the price at which Tesla's shares trade will climb. In fact, it will grow several times higher. But might he be correct? In reality, where is Tesla going? Let's investigate. Welcome back to Tesla Tomorrow, everyone. Although Tesla has long dominated the EV market, competition is intensifying from mainstream vehicles of all shapes and sizes, as well as luxury EVs. According to a data firm, Tesla's market share of newly registered electric vehicles, EVs, in the US decreased from 71% in 2020 and 79% in the previous year to 65% in the third quarter of 2022. Even S&P predicts that when more EV models become available in the upcoming years, Tesla's market share of EVs would drop to less than 20% by 2025. The company added that data indicated Tesla's ability to maintain a commanding market share that will face challenges in the future was made possible by consumers' growing interest in and choice for electric vehicles. So why, in spite of everything, is Ron Barron still bullish? Let's investigate. But before we do, please make sure to subscribe, like, and switch on post alerts if you enjoy this kind of stuff, so you can stay up to current on all things Tesla. Tesla's position is shifting as more reasonably priced alternatives with comparable technology and manufacturing quality enter the market. Still, the automobile manufacturer outperforms all others by a wide margin. With slightly over 936,000 units sold in 2021, the automaker had an almost 14% market share. Despite reservations about the demand for cars, Tesla is well positioned to lead the EV race both this year and in the years to come. For example, Adam Jonas, an analyst at Morgan Stanley, forecasts that 2023 will be a reset year for the electric vehicle market, with supply exceeding demand replacing the previous 2 years' excess demand. Tesla will gain a lot from this change. Are Tesla's rivals going to be left in the dust as it gains momentum? Tech tycoon Chamath Palihapitiya is confronted with the situation where Tesla, the US automaker, has the upper hand. The competition to the top has changed a gear. This statistic will astound everyone. During the first half of 2023, Tesla sold more EV vehicles than all 19 other EV automakers put together. There will definitely be some tightening of the belt in the consumer sector, in my opinion. This is fascinating. You're correct, Chamath, that the unions are going on strike in order to seek greater compensation for a 4-day work week, while the auto firms are facing what you would expect to be decreased demand because nobody can afford a car payment at these increased interest rates. The labor agreement, in my opinion, poses an existential threat to the American auto sector, which is unionized. I'm only pointing out something. I'm not offering an opinion on whether or not this purchase should go through. The existing auto industry will have a very tough time surviving if the contract as stated goes through and you sensitize Stellantis, GM, and Ford's P&L to these new parameters. Then you compare that against highly automated, non-unionized companies like Tesla and Rivian. In a recent audacious forecast, Chamath Palihapitiya predicted that Tesla would become the #1 carmaker in the United States in just 18 months. Chamath Palihapitiya, a Tesla bull and financial guru, recently shared his knowledge on what Tesla investing entails. Even though things right now appear a little depressing, the financial expert pointed out that there's still a lot more going on than meets the eye. With a listing on Forbes' list of billionaires in 2021, Chamath Palihapitiya is no novice in the world of investments and finance. That being said, it would be worthwhile to heed his latest caution. What though, has he said? Make sure to watch through to the very end to hear Chamath Palihapitiya's thoughts on this Tesla investor buying opportunity. The Cybertruck will be very large. People of all ages who own pickup trucks will tell you that they adore the Cybertruck's appearance. It will be out in roughly 2 weeks, the Cybertruck. You're going to see it and become enthusiastic about it because it will be a moving billboard. Even though you're not planning to purchase a pickup truck, you'll visit the Tesla website and find something that truly interests you. What's that? The hype that will go viral on social media once the Cybertruck starts traveling across America is unimaginable. That will have a halo effect that will spark the entire franchise. That's the first. 2, there will eventually be an FSD licensing agreement with another OEM. I'm not sure why they didn't bring this up. People will be really happy because it's likely going to be a corporation like Toyota or Honda, and there will be other FSD licensing arrangements. With its cutting-edge technology and inventive electric automobiles, Tesla has had some success upending the established auto industry. Although some analysts have doubts about Tesla's prospects going forward, the business is still the market leader for electric vehicles and has the capacity to keep coming up with new ideas and upending the auto industry. Experts claim that Tesla's success is due to its emphasis on innovation and capacity to upend the established car industry. The business has stayed ahead of the competition by putting cutting-edge technology in its cars, including as over-the-air software upgrades and AI-driven driving skills. Could this resilience, though, see the automaker through this new phase of intensifying competition? Let's investigate.